So simply, it's a table of content made up of 4 sections. What are the potentials and the challenges in the agricultural sector? Followed by, what are those de-risked value chain investment opportunities? And how do you harness those opportunities? And the conclusion. This is a background that we're all aware of. If you analyze the opportunities and the challenges of the agricultural sector in Nigeria, as you could see, in terms of overall economic growth, agriculture has stood out in terms of those percentages from 2016 to 2020. So without belaboring, you could all see the numbers. Agriculture has always stood out and outperformed almost every other sector in terms of contribution to the economy. You want to be where there's growth opportunity, both in terms of overall economic contribution, overall economic growth in the country, as well as in terms of exports. As you could see, our only competitor here, when I say we, the agriculture side, is the energy goods. But largely agriculture is still about 33% of non-oil exports. Next opportunity set is the issue about population growth. I was just discussing a few minutes ago with Sonia, and he said he was excited to see this happening. But yes, it could be exciting, it could also be challenging. This is a national security issue here. If we don't put money behind agriculture as agribusiness, we're going to be in big trouble in the next 8 years. This is what our population will be by the end of this decade. And this is what it will be in the next, 25, 30 years. This is an opportunity for finance and capital market to put their money where our mouths are. Am I right? We literally mean 264 million mouths and 411 million mouths. That is what it means. Without finance capital, we would be dreaming. Despite, you could see, there are 2 sources of money for agriculture and agribusiness: the banking sector and the market. Look at the contribution of agriculture, 25%, 27% of GDP. But look at where we are in terms of bank financing. Very abysmal, right? At the very bottom, 4.6%. In terms of capital market exposure, now how do you juxtapose these 2 sets of things? You have 264 million people to feed, yet you are allocating finance capital at 4.6%. Here at 0.5%. Are we serious? I don't think we are. We're all waiting for government to allocate a meager budget to a federal ministry of agriculture, right? Or the CBN intervention. Whereas in theory, private capital is limitless, provided you can give the risk-return logic, you can de-risk it for them. So guys, the purpose of this meeting today is to see how can the capital market make money while allowing agriculture to take its rightful place here. And we know the key concerns. It's almost cliche. Limited understanding, high risk, small financeable tickets, projects are not feasible or in most cases not viable, difficulty in monitoring projects, and you can see the beginning of where your money leaves you, but you cannot see how it comes back to you. And there is no financier that will be happy with this kind of situation. In NIRSAL, we understand that all these factors have to be in place for us to convince the owners of money, whether it is the banks or the capital market. There is no way you can approach capital markets and say, finance agriculture for me. There is nothing about financing culture. Culture is what it is. We have to challenge that received wisdom by saying agriculture. Me, as NIRSAL, I cannot be able to convince DLM to raise money from the capital market to finance the culture. The culture is what it is. In fact, it's supposed to remain what it is as a matter of tradition, isn't it? We need to move from financing agriculture, drop the culture to finance agribusiness. Immediately you put the business attachment to agri, it means the business logic must step in. The logic of profit, the logic of financial management, the logic of cash flow, control, and all the things that every business must do to survive, irrespective of whether it is agri. So this is the first display. But underlying that one, all projects to be financed must be technically feasible, financially viable. They must, the promoters must have the capacity to run that business. If you don't have that capacity, hire that capacity and pay for it. You have to have visibility on how the money flows through the system. You must have projects identified before you approach the capital market. A track record assesses for a brownfield project has been there, must be established. For a greenfield project, it must be surrounded by systems, protocols, and procedures that can give comfort to the capital market. There must be assurance of returns. If DLM raises money from the capital market, he must be assured that the return that he has committed to do to the investors must be assured. And there has to be an exit plan that is favorable for all parties. But surrounding all those, there are institutions that manages risk for all parties concerned. And that is why NIRSAL comes in. So that leads us to what are those investment opportunities that are de-risked. And that is of interest to everyone in this room. Let me start by quickly introducing NIRSAL itself. All of you would have known about the history of this organization. We're just about 5 years old, getting to our 6th year. But these are collaborative partners, largely driven and owned by CBN 100%, but policy space owned by the Federal Ministry of Agriculture. All the MDs of Nigerian banks are actually a member of the board of NIRSAL, represented by a bank at a time. In fact, they are party to the creation of NIRSAL. And these are some of our key objectives. And our fund, did I mention that the CBN set us up with about $500 million US in order to give comfort to whoever we give our guarantee to. And these funds are shared accordingly, 300 million, 30 million insurance rating and the rest. That does not mean I'm giving out this money. The whole idea is that we have this money and we have grown that money to be able to issue guarantee certificates to investors and financiers to know that they are comfortable enough to bring out their money. Now, so far, to give additional comfort to capital market operators, this is our report card for the last 5 years. It's obvious. At the last count, I think by Q2 this year, we have done up to $644 million US. In theory, we have achieved the theoretical construct of a risk-sharing facility. The whole idea is an opium. Use other people's money. We leveraged our $500 million funds to bring out $644 million US without losing up to 1% of our own money. That is a smart system. We've been able to pay back to good borrowing and repayment behavior up to $7 million US, what we call the interest drawback. At the last count, we think we are supporting right now up to 1.4 million farmers. We have project monitoring and remediation offices covering all the 774 local governments in Nigeria. This is the kind of thing that the financiers need as a comfort. You can release the money in Lagos, but you can rest assured that your project, whether it's in Damaturu or Nguru, or in Lela or in Sokoto or somewhere in southern Nigeria, we have our eyes covering that project. These are some of the numbers, but the key thing, ladies and gentlemen, is that in the last 5 years, look at the non-performing loan level for NIRSAL guarantee, less than 1% against $644 million US. The reason is we spend all our times and our monies to keep an eye on any project we guarantee. This is really an enlightened self-interest. If I guarantee a project and I go to sleep and the owner of the money goes to sleep, what happens to that project? It goes south and who ends up paying? I guarantee that project 75%. All the bankers need to do with the capital market is knock on my door. Please pay up, the project has failed. We can't afford to allow a risk event to happen. That is why in our name, a DNA of NIRSAL is risk management. And that is a testimony to our capacity to risk manage projects that we guarantee. So, having said that, let's go into the opportunities. This table represents structured agribusiness financing opportunities for the capital market, for the bankers and everyone. If I ask a capital market operator or a banker to finance agriculture, it will be a hard sell because it's difficult to understand what I mean. But assuming I break down any commodity into its logical component parts here, it begins to make sense. It doesn't matter whether it's cocoa, rubber, sesame, gum arabic, maize, rice, soya, whatever it is. Every single commodity you know has a value chain logic. Just like oil and gas. You have the pre-upstream, upstream, midstream, and downstream. Now, if you approach the owners of money and break down any opportunity into these component parts, it begins to make sense. Because if you say you're going to finance farmers, a farmer's business is essentially to buy a seed, isn't it? To buy fertilizer, to get mechanization, to get irrigation, and to project manage his farm, isn't it? Guess what? All these 4 or 5 components can be done as a service. It can be done as a service. In other words, you disaggregate the opportunity into its component parts and finance a tradable business rather than finance a farmer or put pocket or money into the pocket of the farmer's hand. In sub-Saharan Africa, in Africa, that's a difficult hard sale. In advanced economies, the OECD countries, they can actually put money into the account of the farmers because they are far advanced, they manage the money, they produce value and pay back. The reality in Africa, sub-Saharan Africa, we cannot afford to do that if we are to square the cycle. So therefore, you disaggregate the opportunities and break them into component parts. And these are, ladies and gentlemen, the investment opportunities available for any commodity you can imagine. Look at these commodities, from cassava through wheat, all the way to hibiscus and fresh fruits and vegetables. This is the primary production part, and that is what we call the midline investment opportunity. But almost 80 to 90% of what you spend here, it's actually spent on some of these activities, isn't it? Production, harvesting, primary processing, primary transport, and primary storage. Each of those activities can be set aside and be financed on its own, provided you can lock them in to the primary producers. Our farmers don't have the capacity to handle technology, to handle machines. You remove those kinds of items from the hands of the farmers and you create separate businesses, finance those businesses, control these businesses, but map them to the land. That way you can see risk management at work. You can see fee for services being paid for. A farmer doesn't have to own a 250 horsepower tractor to do 10 hectares and park it as a status symbol in the village. It doesn't make sense. But that same 250 horsepower tractor can service a cluster of 200 hectares, 500 hectares, and remain in business for the rest of the year. And guess what? Who says a tractor can only do plowing and harrowing? This same beast of work, you can remove the tires and convert it into a generator to generate energy to pump your irrigation system. You can actually attach trailers at the back of that tractor, 10 trailers, 15 trailers, depending on the horsepower of that tractor, to provide evacuation services from farms. That tractor can be used year-round, and therefore, if I've convinced the capital market to put down $500 million to buy equipment to deploy services to millions of farmers around the country, it makes sense. I'm not putting money into the hands of the farmer because he has no need to acquire capital equipment and pack it. The same thing with irrigation. We have developed a model, what we call the climate smart irrigation system, where we're used to irrigation being a government multi-billion-dollar driven thing. It doesn't work that way. If you are able to cluster farmers, create governance for them, create economic sizes amongst farmers, you can actually deploy modular plug-and-play irrigation systems. Today, you don't even need grid electricity. Solar-powered irrigation systems are the rage. If you go to the Indian subcontinent, India, Pakistan, Bangladesh, this is the kind of system they deploy all over. I went to Morocco. Most of the farms in Morocco are actually irrigated not from massive government dams, but from little Renault engines or Peugeot engines powered by, guess what? Cylinders of methane gas, the same cooking gas you use in your houses. And they pump the water and they produce year-round. And I don't see why we call ourselves a gas nation with 206 trillion standard cubic feet of gas. And we're talking of only automobile gas, industrial gas, and cooking gas. When 80% of your population need that gas deployed in the field to power irrigation machines to pump water for them. The day when we can do that, it means that farmers can stay on their field year-round. Those 8 to 9 months in northern Nigeria that they get out of the field and become a nuisance doing armed robbery, banditry, and kidnapping, they will stay back in the fields. And guess what? We have enough billions of cubic meters of surface water and subsurface water. All you need to do is to have the energy to pump it out and distribute it. Young people will stay in the farm. They produce, they harvest, they go back, produce, and harvest. You can be able to do 3 cycles in a year, even in extreme northern Nigeria, not talk of the south. Climate change has affected even southern Nigeria. You cannot predict the rainfall pattern, and you can lose. Why am I saying so? Because if I can be able to raise money from the capital market, they need to ensure that I can create the revenue. How do I ensure revenue? By having the highest possible yield. How do I have the highest possible yield? By making sure that I produce more than once. I should produce at least twice. Fund is annualized. If I take at an interest of 1 year, if I produce twice, even if I have failure in the first cycle, I can make a success in the second cycle. So irrigation, captive, off-grid powered irrigation systems there to go. And again, you can create discrete businesses around that one. And farmers will get what? Water as a service. You can pay just like software as a service. You can do irrigation as a service. Young graduates can actually own these components together with their gas cylinder or solar power system with their pump, set up the system, dig the water out, soak the water out, deliver the water, and charge the farmers. You either charge upfront or you wait when they harvest. They pay you just like NEPA charges for their energy consumption in the homes. These are things that can be done. And millions of young graduates can set this up as an enterprise. So the farmer has nothing to do with irrigation. He has nothing to do with tractor. He gets that service because he creates the value out of his revenue he pays for that service. So these are some of the available opportunities that the capital market can look at as discrete, independent, stand-alone businesses, but all of them servicing this production system. So what NIRSAL did was to create what we call a geo-co-op model, whereby we socially engineer the communities. We all know that farmers in the real world, they are already cooperated without knowing. Every little plot of land is a neighbor to the next one. But on these little plots of land, they do all sorts of things. They grow beans here, rice here, yam here, cocoyam here, okra there. It doesn't make sense. If you are under the same kind of soil chemistry, under the same kind of microclimate, in the same community with the same language, why don't you also grow, all of you coming together, grow what the market wants so that you can get the best price for your commodity. You can get structured financing, you can get structured offtake, you can get structured service provision, and you can get the best price that the market has to offer, provided all those little plots can come together and create a sizable piece of land that you can deploy mechanization for. So what NIRSAL did in the last 2 years is to develop that concept and share it out and sell to the communities. And we actually go to the rural areas and socially engineer them. So what do? We aggregate smallholder farmers to form what we call optimized agro-geo cooperatives to enable technology deployment and reference management, and we collocate and embed ancillary modular processing services to them. When you form AGCs into 250 hectares, a ticket to fund a 250 hectare size is something in the region for rice, is something in the region of 65 to 75 million naira. The same farmer, if you are to isolate him and fund his 0.5 hectare, is about 80,000 to 100,000. How does it make sense to travel all the way from Kano to Lagos, a bank headquarters, and say, I have a farmer that needs 80,000 to finance his business somewhere in Kano? It doesn't make sense. But the same farmers, if I'm to aggregate them into this size, socially engineer them to agree, I can raise a ticket size of 75 million and come to a bank, and multiples of that, I can approach a bank with a ticket size of 500 million, 300 million, $1 billion naira to finance groups of farmers. And for the capital market, this is the kind of structure that they will need to see, not those disaggregated farmers. And so far, we have been able to succeed in creating those geo-cooperatives, And we have so many partners that we're working with on that. The irrigation system also follows the same model. Either it's solar powered or gas powered. You get a cluster of farms, you bring out the water, you provide the water as a service, you either collect the money or you bill the farmers very small amount and then they pay when they harvest. And right now we're talking with the NNPC, we're also talking with NASENI. NNPC is talking about providing the gas, NASENI is talking about providing us with the solar systems. Once we prove that model, we're ready to bring it to the capital market for going to scale. Let me not bore you too much. These are some of the other opportunities. This one is very interesting, especially in southern Nigeria. Land is an issue here, but forest is available. So, how do you convert idle land into productive land, dead asset into live asset? We created what we call the smallholder-based commercial agriculture site and services. This is a business venture in and of itself. You get a company that brings in this kind of equipment that is required. It does the land clearing, it does the parceling, the infrastructure, the drainage, the contouring, and divides that land into hectares and into clusters of hectares. And then finally, the SATC. This one is a model that we have developed and sold to the Federal Ministry of Trade and Investment. We know the key issue about moving commodities from northern Nigeria to the south and also from Nigeria, southern Nigeria to the north, especially agricultural commodities. Instead of our security system to deal with those commodities as national security issues, you find multiple local governments, multiple uniformed people, multiple policemen or whatever, harassing trucks moving either cattle or food or tomato from north to south, the other way from south to north. What we did, we said, look, there has to be a way to create structured corridors that when a truck is registered with the SATC system, if a truck is in that corridor, nobody stops it, nobody disturbs it until it delivers. And electronically, we're going to track that truck all the way from Kano until it discharges in Lagos. Digitally, you can see the movement of that truck. And if there is any taxes taken that to scale by creating like 5 corridors, Maiduguri to Lagos, Sokoto to Calabar. And after we do the road one, we're also going to talk to the Nigerian Railway to create a railway corridor, inland waterways corridor, as well as aviation corridor. So in conclusion, we are calling on the capital market to work with NIRSAL to provide short, medium, and long-term financing. And we in NIRSAL, we are ready to deploy our resources to provide proofs of concept that can be taken to scale. So NIRSAL's approach is like this. We create the risk models and structure projects to channel those investments. We create ecosystem of verifiable or veritable value chain actors, and we provide institutionalized risk management structures and approaches. As you can see, NIRSAL itself is a blended finance in action. We provide technical assistance, we do proof of concept investments, we provide credit guarantees, we create market incentives in order to have guaranteed return on investment and all the goodies that will come out of this engagement. And what is our call to action? It's obvious. Capital market players, we want you to jointly create fund portfolios that can be applied across agricultural value chain. Regulators, we want them to support the capital market to approve whatever they need for the expansion of new investable asset classes. Our job in NIRSAL is to develop bespoke agribusiness models, finance and investment solutions, and all players in this room and elsewhere in Nigeria, we want you to explore the financing opportunities available through the capital market. Thank you very much.